The job market is looking better tonight. Just the kind of encouraging news Americans like to hear as they gear up for barbecues and fireworks. American businesses hired 188,000 workers in June. That was more than expected, according to payroll firm ADP. Now, most of the new hiring came from construction and small businesses. This could be a good sign for the Labor Department's employment report that comes out on Friday. It's an important number that investors will be watching closely. If it's a strong one, it could impact changes in Federal Reserve policy, growth in the U.S. economy, and the stock market.
And joining us now to talk more about jobs and what he expects from that June report that comes out on Friday, Bruce Kasman, chief economist at JPMorgan. Mr. Kasman, welcome. Great of you to join us today. What is the kind of number that you're looking for? We had the ADP report out today that was a little higher than some people thought it might come in at. What are you looking for Friday?
We're looking for 150,000 on the payroll count, and I think that would solidify the message that jobs are continuing to grow here, but it's growing at a slower pace. I think that's also consistent with an economy that really hasn't shaken out of that 2% pace of growth overall. And so we think the economy is sluggish, jobs are okay, and it's going to make the Fed's decision as it moves towards the September, I think, point at which it'll think about tapering pretty tough.
Bruce, besides the headline number, what else is important in this report? We know that each of these employment reports are so critical to Fed policy and to investors. But is there any key element that you're going to be really looking for?
Well, there's always a lot of stuff. I think first and foremost beyond the job count is the unemployment rate, and looking at the unemployment rate from the point of view of jobs versus labor supply. We're certainly hoping that there's better news again after last month's report on labor supply that keeps us feeling their workers entering the workforce. I think after that you want to look at the composition. We had a very weak service sector survey from the ISM today. We want to see that service sector jobs, which have been a bright spot this year, continue to hold up. That would be a concern if it didn't. And then I think you look at the income side, which is always important to see how labor income, that has to do with the work week, it has to do with the wage number alongside the job gains.
You know, Bruce, a moment ago you said that your prediction was 150,000 payroll jobs added in the most recent month, and that would make it very difficult for the Fed to begin pulling back from its stimulus in September. I don't mean to put words in your mouth, though I'm often accused of doing that better than anything else I do, but I assume that that's a kind of Goldilocks number then, not too hot, not too cold, that would be good news for the stock market.
I think generally speaking, yes, although I never try to be too precise in understanding where the market's going. You know, I think 150,000 is an okay number. It's not where we want to be. It's not where the Fed wants us to be. But it's certainly not the kind of slipping we saw in both the spring of 2011 and 2012, where it did look like businesses are pulling back. So I think you're right. It's somewhere in the middle. I think certainly for the economy point of view, over time, I think we'd like to see stronger job growth, stronger growth overall, and we'd like to see a Fed tapering in response to that strength. So I think overall strength would be good here, but certainly the response that people would expect from the Fed has and will continue to put jitters through the market.
You just said you want to see stronger job growth. Everybody wants to see more people getting jobs. It's good for the economy. What's taking so long? We report every night about how auto sales are doing better, housing, construction, retail. How much more do we need to really get companies hiring again?
Well, I think you're making an interesting point. We're seeing pretty strong news in the auto industry. We're seeing pretty strong news in housing and construction. But I think we're being held back here by a fiscal drag that is still pretty intense. I think we're being held back by a global economy that is still pretty weak. And the balance of this is giving us something which is, I guess I'd call it lackluster, nothing terrible, but nothing exciting. We'd like to see things move better, and there's hope that the drags, at least on the fiscal side, will fade. But that's still a forecast. It doesn't look like where we are right now.
Bruce, thank you so much for joining us on this holiday shortened trading day, and have a good 4th of July.
Thank you.